Hey everyone, welcome back to Investing Talk Podcast. Today, we're going to be looking at space investing. We're going to be taking a closer look at Intuitive Machines, LUNR, a company with some pretty ambitious goals. They're literally shooting for the moon, and there's a good reason we're talking about them. LUNR has been making waves with some impressive revenue growth. We're talking a mind-blowing 359% year-over-year increase. Not only that, but they've got a hefty backlog of contracts, totaling over $316 million. It all paints a picture of a company on a rocket ship trajectory. But as any seasoned investor knows, the ride can get a little bumpy. And LUNR's stock price has definitely seen its share of ups and downs.
Yeah, you got to be careful not to get caught up in the hype. Space exploration is a hot sector, but it's also inherently risky. So before you throw your hard-earned money at any space stock, it's vital to dig deeper, understand the fundamentals, and assess the potential risks.
Okay, so let's get down to business. First, let's take a look at LUNR's recent performance. Their Q3 2024 revenue came in at a whopping $58.5 million. That's a massive jump, and a lot of it's driven by those juicy contracts they snagged with NASA and other space ventures. But what about their stock price? Well, as of December 13th, 2024, it's sitting at around $11.68. Now, that might sound decent, but the stock has been on quite a roller coaster ride this past year, swinging between a high of $17.14 and a low of $2.09. So for those of you thinking about jumping in, buckle up. It could be a wild ride.
Exactly. That volatility we're seeing is a big red flag, especially since LUNR is still relatively new to the game. However, landing those NASA contracts is no small feat. It's a huge vote of confidence from one of the biggest players in space exploration. And it definitely adds some weight to the argument that LUNR could be a major player in the future.
So the question on everyone's mind is, what are the experts saying? Well, analyst sentiment seems to be pretty much one-sided. We're seeing a unanimous strong buy reading from 5 different analysts. That's a pretty strong signal. And it's got a lot of folks buzzing. These analysts are also setting some pretty ambitious price targets, with an average of $14.10. That implies a potential upside of over 20% from the current price. And some are even more bullish. Canaccord Genuity, for instance, predicts LUNR could soar to $17.50. Of course, there are always more conservative estimates. Roth MKM, for example, has set a more modest target of $10.
Yeah, these analyst ratings are a useful tool. But it's important to remember they're just one piece of the puzzle. They're not guarantees, and analysts can be wrong. What's really interesting here is the overall consensus. Despite the varying price targets, everyone seems to agree that LUNR is a stock with serious potential. It speaks volumes about the level of confidence in the company's future.
Now let's switch gears a bit and talk about something that's near and dear to a lot of our listeners: value investing. Is LUNR a good fit for those who prefer this approach?
Well, that's where things get a little more complicated. We've seen a range of intrinsic value estimates, from $4.46 to $6.15. Now, if those estimates are accurate, it suggests that LUNR might be trading at a significant premium. We're talking potentially 62 to 80% overvalued. And that's a big red flag for value investors who are all about finding bargains.
Right. Value investors are looking for companies that are fundamentally undervalued by the market. They want to buy low and sell high. And overpaying for a stock goes against that core principle. Now, LUNR's growth potential is undeniable, but those sky-high valuations make it a riskier bet for value-focused folks. And it's not just the valuation that's raising eyebrows. LUNR is still reporting negative earnings, and that's not exactly a hallmark of a financially healthy company. Plus, they've got this Altman Z-score of negative 1.82. I know that might sound like gibberish to some of you, but it's actually a key metric used to assess a company's financial health. And a negative score like LUNR's signals a heightened risk of bankruptcy. It's a warning sign that investors should definitely dig into.
You hit the nail on the head. The Altman Z-score is all about gauging a company's financial stability. It's a way to assess the likelihood of a company going belly up. And while LUNR is generating buzz and excitement, their current financial picture is raising some valid concerns, especially for the more risk-averse investor.
Okay, so we've talked about LUNR's financials, the analyst opinions, and the value investing perspective. But let's not forget, they're not the only ones vying for a piece of that space pie. There's a whole constellation of companies out there aiming for the stars. And to get a better sense of where LUNR stands, we need to look at the competition. For today's comparison, we'll be focusing on 3 other players in the space race. Nextracker, that's NXT on the market, Rocket Lab trading under the symbol RKLB, And lastly, Spire Global, known as SPIR on the exchanges. All four of these companies are currently enjoying buy ratings from analysts. It seems like everyone's betting big on the future of space. But here's where things get interesting. Nextracker seems to be the current darling of the analysts, boasting the highest average price target and a potential upside of almost 50%. That's a pretty significant lead over LUNR and the others. So the question is, what's giving Nextracker such a liftoff?
Yeah, this is where understanding the nuances of each company's business model becomes crucial. While LUNR is focused on lunar landings and transportation, Nextracker specializes in solar trackers, which are essential for maximizing energy capture in solar farms. And guess what? As the world shifts towards renewable energy, the demand for solar trackers is skyrocketing. That's a major tailwind for Nextracker and a key reason why analysts are so bullish.
So it's all about riding those macro trends. The growing demand for clean energy is definitely a powerful force, and Nextracker seems to be positioned perfectly to capitalize on it. But what about Rocket Lab and Spire Global? How do they stack up against LUNR and Nextracker?
Well, Rocket Lab is carving out its niche in the small satellite launch market. They offer a dedicated launch service for these smaller payloads, which is becoming increasingly important as more and more companies and organizations want to send their own mini satellites into orbit. It's a different play than LUNR's lunar focus, but equally promising.
So they're kind of like the FedEx of the small satellite world. Makes sense.
Yeah.
And what about Spire Global? What's their specialty?
Spire Global is all about data. They operate a constellation of nanosatellites that collect a wide range of data from space, everything from weather patterns to maritime traffic. This data is then sold to various industries, including agriculture, aviation, and even hedge funds. They're essentially tapping into the growing need for real-time global data. And that's a market with huge potential.
Okay, so we've got lunar transportation, solar energy, small satellite launches, and space-based data analytics. It's fascinating to see how diverse the space industry is becoming. It's not just about putting astronauts on the moon anymore. It's about developing practical solutions and services that have real-world applications. Thinking back to our earlier discussion about value investing, this competitive analysis sheds some light on LUNR's position. While their growth potential is exciting, they're operating in a more niche market compared to some of these competitors, and that's something for potential investors to consider.
Absolutely. Comparing companies side by side like this forces you to think critically about their target markets, their growth trajectories, and their overall strategies. It helps you understand where each company fits within the broader space ecosystem and make more informed decisions.
So let's shift gears a bit and talk about some broader market trends that could impact LUNR and the space sector as a whole. We've recently seen a post-election rally, and small-cap stocks like LUNR have been riding that wave of optimism. There's also talk of potential interest rate cuts by the Federal Reserve, which could further fuel this sector.
Yeah, the macroeconomic environment plays a crucial role in shaping investor sentiment and market performance. A strong economy and accommodative monetary policy tend to favor growth-oriented sectors like space exploration. However, it's important to remember that these trends can reverse quickly, so staying informed and nimble is essential for navigating the market's twists and turns.
That's a great point. It's all about being adaptable and staying ahead of the curve. And speaking of staying ahead of the curve, another thing to keep an eye on is LUNR's upcoming earnings announcements. How they perform in the coming quarters will provide valuable insights into their progress and will likely have a significant impact on their stock price.
Yeah, earnings reports are always a key catalyst for any company. But especially for a young growth stage company like LUNR, they offer a glimpse into the company's operational performance, their ability to execute on their plans, and ultimately their ability to translate their vision into tangible results.
All right, so before we wrap up our discussion on LUNR and this exciting world of space investing, I want to take a step back and address a fundamental question. Why should anyone even consider investing in space exploration? It sounds risky, futuristic, and maybe even a little out there.
It's a fair question. But it's crucial to remember that space exploration is no longer a futuristic fantasy. It's a rapidly growing industry with tangible, real-world applications. We're talking about everything from satellite technology that powers our communications and GPS systems to the development of new materials and technologies that have the potential to revolutionize various industries here on Earth.
You're right, it's easy to get caught up in the sci-fi aspect of it all. But there's a real economic engine driving this sector. And companies like LUNR are at the forefront of this transformation. They're not just dreaming about the future, they're actively building it. And that's what makes this such an exciting investment opportunity.
Exactly. And for investors who are looking for long-term growth potential, space exploration offers a compelling proposition. It's a nascent industry with enormous room for expansion. And as the technology matures and the costs come down, we can expect to see even more innovation and investment in this space.
It feels like we're on the cusp of a new era, and it's thrilling to think about the possibilities. But as with any investment, it's essential to approach it with a healthy dose of caution. Space exploration is inherently risky, and there are no guarantees of success.
Right. That's where a thorough understanding of your own risk tolerance and investment goals comes in. Investing in a company like LUNR, which is operating in a relatively new and unproven industry, carries more risk than investing in a well-established company in a mature sector. It's important to weigh those risks against the potential rewards and make sure you're comfortable with the level of uncertainty.
That's a great point. It's all about finding the right balance between risk and reward. So as we wrap up our discussion on LUNR and the future of space investing, let's recap some of the key takeaways for our listeners. LUNR is a company with ambitious goals, impressive revenue growth, and a strong backlog of contracts. They're making waves in the lunar transportation market, and their partnerships with NASA and other major players signal a promising future. However, their stock price is volatile. Their financials are raising some concerns, and their valuation might be a bit too rich for some value-conscious investors.
Moreover, it's crucial to consider the competitive landscape. While LUNR is making strides, they're facing competition from companies like Nextracker, Rocket Lab, and Spire Global, each with their own unique strength and growth trajectories. Understanding these dynamics helps you make more informed investment decisions.
And finally, it's essential to acknowledge the broader market trends and the inherent risks associated with investing in space exploration. A strong economy and favorable monetary policy can provide tailwinds for this sector. But these conditions can shift rapidly. It's all about staying informed, adaptable, and aligned with your own investment goals and risk tolerance. So there you have it, folks. Our take on LUNR and this fascinating world of space investing. It's a sector filled with potential, but it's not for the faint of heart. As always, thorough research and a clear understanding of your own investment objectives are paramount. What do you think about LUNR and the future of space investments? Let us know in the comments. And don't forget to subscribe and share this episode with anyone who's interested in exploring the cosmos of investing. It's like we're standing at the edge of a new frontier, and it's both exhilarating and a little daunting. We've covered a lot of ground today, from LUNR's financials to the broader space industry landscape. But before we sign off, I want to leave our listeners with one final thought.
I think it's important to emphasize that space exploration is no longer just a government-funded endeavor. Private companies like LUNR and its competitors are playing an increasingly vital role in pushing the boundaries of what's possible. And that opens up a world of investment opportunities for those who are willing to embrace the unknown.
That's a great point. We're witnessing a paradigm shift in how we approach space exploration. And it's creating a whole new playing field for investors. It's not just about rockets and satellites anymore. It's about developing new technologies, harnessing resources, and building a sustainable presence beyond Earth. It's a long game for sure, but one with potentially astronomical returns.
Exactly. And for those who are intrigued by the potential of space investing, but maybe a bit hesitant about diving headfirst into a company like LUNR, there are other options. You can explore exchange-traded funds that focus on the space sector, or consider investing in more established aerospace companies that are expanding their footprint in space.
That's a smart strategy for those who want to diversify their portfolio and mitigate some of the risks associated with investing in individual companies. It allows you to tap into the growth potential of the space industry without putting all your eggs in one basket.
Precisely. The key is to do your due diligence, understand your risk tolerance, and align your investments with your long-term goals. Space exploration is a marathon, not a sprint, and patience is key.
Couldn't have said it better myself. Well, folks, that wraps up our discussion on LUNR and the exciting world of space investing. It's a sector that's brimming with potential innovation and, yes, a healthy dose of risk. We hope this episode has given you a better understanding of the opportunities and challenges that lie ahead. What are your thoughts on LUNR and the future of space investments? Let us know in the comments. And don't forget to subscribe and share this episode with anyone who might be interested in exploring the cosmos of investing.